They printed more money in 6 months than they had in the whole existence of the United States. What do you think about that, old Brack?
The Central Bank of the United States.
That was interesting.
What was interesting about it?
I like what he said about. Well, I thought it was interesting about Volkner or whatever. He said he didn't think politicians would allow a new chairman or whatever to do what he did.
Is the Fed a politician?
I mean, yes and no.
How? Do you know who the Fed is? Have you researched it?
The Federal Reserve?
Yeah.
Yeah, what's you put me on the spot. I can't think of his name now.
Who?
The chairman?
Yellen?
Powell?
Powell?
Mm-hmm. I would have to think that it's all.
How does Jerome Powell get his job?
Think he's appointed, isn't he?
Google that.
Is the chairman of the Fed appointed or elected?
Oh, he's appointed. He's not elected.
That's what I thought.
But who appoints him?
I don't know.
Give it a quick Google.
Is it the old POTUS?
I mean, it's the president.
Who-
Let me Google it. Hold on.
POTUS?
Now, so is the Fed part of the government? While we figure out who.
Yeah, nominated by the
Okay.
president. I think confirmed by the Senate.
Okay.
I think.
So now is the Fed are they part of the government?
Yes.
Are you sure?
Not anymore.
Google Federal Reserve, or just click on it. It's right there at the top. Federal Reserve is the central banking system of the United States of America. It was created on December 23rd, 1913 with the enactment of the Federal Reserve Act after a series of financial panics. 1907 crash. I read about that one. Over the years, Great Recession, all that. Congress established three keys monetary objectives, blah, 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 blah. Regulating banks. Federal Reserve is composed of several layers and is governed by the presidency-appointed Board of Governors or Federal Reserve Board, 12 regional 12 Federal Reserve banks. Nationally chartered commercial banks are required to hold stock. Hold on, he just lost it. There it is. Stock in and can elect some board members on the Federal Reserve. So is that a government entity?
I mean, yes and no. If your chairman's elected or appointed by the president, by technicality, no, it's not a government whatever. But I mean,
Who owns it?
I don't know who owns it. I mean,
It just
stockholders.
says naturally chartered commercial banks are required to hold stock.
So stockholders.
Yeah, who are the stockholders?
I don't know.
Banks.
Nationally chartered commercial banks are required to hold stock.
Is it just that? Just those banks could be shareholders of it?
I mean, look, you're reading everything I'm reading.
No, I'm just. I know, but I don't know if just that's
the
it.
the Federal Reserve is not. Go back up. It's not owned by anyone.
Mm-hmm.
Okay, now this is a falsehood. How do you own stocks? If you own stocks, what do you own?
Ownership in a company.
Who do you get to put board members up?
Right. You can vote
So, what is the job of the Fed?
to regulate the reserve requirement of banks.
No.
Yes.
They loan money to banks.
Right. They regulate the reserve requirement, and the discount rate
No,
is the
they
rate
don't-
that they loan it out to the banks.
They don't regulate the reserve requirement.
They come up with the reserve requirement,
Congress comes up with the reserve requirement,
and they loan it out.
and they loan it out. Who owns the Fed?
The
Banks.
member banks.
The member banks. So the member banks own the banks, and what do? Loan money to the banks. Now, I don't understand the Fed's balance sheet. I have no idea how the Fed's balance
I don't know
sheets
how that
work.
works.
But banking balance sheets in general are fucking ass backwards. So this whole fucking guise of a central bank is pretty wild. Now, monetary you hear about monetary easing all the time, quantitative easing, all this nonsense. Who prints money?
The Treasury.
allegedly, right? So the government passes a bill, and says we want to spend X number of dollars, and they ain't got it. Who gives them the money?
They'd have to bonds, right?
Yeah, they sell some bonds. Who buys the bonds?
Whoever. I don't know who buys bonds.
Federal Reserve.
The Fed can buy the
banks. Now, when a bank, you said deposit requirement. So somebody sets the deposit requirement. I mean, I assume it's Congress, since whenever they passed the old COVID bill, they lowered the deposit requirement down. I don't think the Fed can change that.
So it's okay. So if Congress is setting the monetary policy of it, they loan the overnight deposit requirement out. The Fed does. So, and I guess his point in the video was he doesn't think that politicians will allow them to be as aggressive as Volcom or whatever was.
I mean, I assume since the president appoints the guy, he could unappoint the guy, and that would be the only thing that would be at risk. But I mean, really and truly, they don't have a
in a technical manner, like they don't have power over it.
Yeah. Now, I don't know if the Federal Reserve Act was the one that brought all the Federal Reserves together, because used to you had like 5 or 6 different central banks that were in different parts of the nation, and so there was no national interest rate. The New York Federal Reserve Bank, or New York, could have their interest rate, and Texas could have their interest rate. It didn't go nationally. But there's a lot of this that is extremely, extremely complicated. I don't understand it, but one thing I do know is fractional reserve banking is how money is printed. So whenever the bank has their deposit requirement, they can loan that out 10 times, and that's how money's printed. That's how, when Munger was talking about increasing the currency supply, banks do that. Low interest rates helps fuel it. The money supply grows when interest rates are low, because think about it like this: if the bank has to keep $1 and can loan out 10, okay, I mean that's a big extra amount of print, right? Mm-hmm. If interest rates are 8-9% like they are right now, are there a lot of people going to borrow money?
Not as much.
Not as much. They can't. They don't have it, so they can't grow the money supply at the same rate. When interest rates are low, they can grow the money supply a lot faster because more people are borrowing. So if
they're originating a whole bunch more paper. So.
Yeah, if a bank loans me money to buy your free and clear house, I give you that money. Does that money exist?
Somewhere.
Well, I mean, if I hand it to you in cash.
Yeah, it can exist.
It exists. Now, I borrowed the money from the bank. They gave it to me in cash. Okay, you go put it right back in the same bank that I just took it out of. They loan it out 10 times again. You see how the money supply grows? Money's always, pretty much always, sitting in a bank. When it's sitting in a bank, they can loan it out more, even though that transaction, you know what I mean, happened between us.
Right. I go
it,
deposit that same money, and they play the same game with the money in there.
Well, they get money in there, and so they just play that game over and over again. It'd be easier if there was one bank to wrap your head around it. So you just got to pretend there's one bank, because everybody else will be like, no, I'll go put it in my bank. You know, that I get it. But whenever somebody else comes and buys that house, my bank gets paid off. Now what do they do with the money? They loan it out 10 times again.
Right. And
it's a never-ending cycle. But that's also known as the velocity of money. So when the velocity of money is high, what does that mean?
It's moving fast. It's recirculating.
It is moving fast, but what else does it mean? The money supply is growing. I've never seen the issues with the money supply growing. I can't wrap my head around the misery of higher interest rates right now that has on the whole economy as a whole, as long as the capital that's in the marketplace is creating more opportunities. Does that make sense?
So, meaning that the money that's already out in circulation now, you don't think interest rates can reach that fast enough?
No.
Or anytime soon?
No. If I loan you money and you take that money and you go build something of value with that money, which means you got to hire people, you've got to buy real estate, you've got to build something of value. You get what I mean? Mm-hmm. I don't see the problem with it as long as most of the money is being used in that manner. If the opposite is true, and the money supply increases like it did during COVID, okay, and that money doesn't get used to create anything, okay, what happens?
It's just sitting there.
No. Money's no, nobody leaves money still. But if I don't take my money and go create any widget, they call them widgets, right? So I give you money, you use it to build a boat, okay? Is that valuable?
No.
It's out of circulation.
Well, I mean, you built a boat, it's valuable. You had to pay somebody, you had to source materials, you had to build a boat.
Yeah, like it. But
so
I mean,
people got a job, they
in
got to
what
go to
sense
work.
is it valuable? Yeah, like on the buy side, the seller of that boat, yes, they created value. They're building it to sell or whatever.
Yeah, they built a boat. And
Right.
and let's say I got money and I go buy the boat. Mm-hmm. You also made your margin.
Right.
So all your employees, the suppliers of all the goods, raw material,
Manufacturers down the line.
everybody got paid
yes.
along that transaction. What happens if I take the money and I give it to a bunch of people that want to buy a boat, okay? A single boat, one boat, 10 people, but you only built one because you only had the capacity to build one. And now all 10 of us want to buy it. What happens?
Supply doesn't meet demand, price goes up.
So now what do we got?
More expensive boat.
And why do we have a more expensive boat though? Because of
There's not enough
inflation.
supply. Yeah.
Because of inflation. There's nothing being created. So as long as the money supply is being increased, and with it being increased, they're building more iPhones, and people are showing up to buy iPhones and microphones and mic stands and chairs. As long as they've got an outlet for that, okay, they increase the money supply, the money stays in motion, and you can go buy something. What he was talking about was the expensive watch to get robbed from, the envy that keeps the economy going. It can go. During COVID, a lot of people got a lot of extra money, got a little bump. They didn't have no place to go with it. They couldn't go see anything. They couldn't go eat anything. They couldn't keep that money in motion. So you got inflation. It's probably the first time and only time in the history of. I mean, they printed so much. I mean, it's like $6 trillion. They printed more money in 6 months than they had in the whole existence of the United States. I mean, it's a crazy amount of increase in the money supply. So they created inflation because that money, had too much money chasing not enough goods and services. Boom, you get inflation. Their solution to this, let's make money more expensive. Well, that doesn't solve anything. You know what I mean? People still got the money.
It's already in excess.
It's already in excess.
It needs places to go, not.
Now you're going to hamper the ability for people to create goods and services. Like, you're going to make it harder for them to buy a Ford on credit. It doesn't make any sense. You're going to make it harder for Ford to borrow money to be able to go create a new electric vehicle.
Go finish another chip plant or whatever.
Whatever.
That makes everything go faster.
You're gonna hamper everybody's ability to get something done and make them pay more money, because $6 trillion down the economy. Now, where did all that $6 trillion go? It went all over the place, and it's sitting somewhere right now, ready to place a big bet, probably on the stock market or somewhere stupid. I mean, the hedge funds got it all. They had it in a matter of fucking days, probably.